Hello, Enosh.
Hello, so let's start now. Okay, today we are not going to use up to 1 hour. Just want to explain some things in the binary trade. Okay, so today's topic is based on fake breakout, or sometimes we call it fake out, then breakout. There are different between fake breakout and real breakout. So, like I said, like if you heard someone said this is a fake out, it means the person is telling you that this is a false breakout. What I mean is that if someone is telling you that this is a fake out, okay, if someone said this is a fake out, it means fake breakout, fake breakout. Okay, so fake out means when the price approach a, an important levels on your chart. For instance, a resistance, then the market reach resistance, break the resistance, and then drop back and came back to the zone or to the range. That is what we call fake out, fake breakout. But when the price break a level to the upside or to the downside, this is what we call breakout. But if it is a re-breakout will only retest the level again, then continue. This is what we call re-breakout. So if price break a level, it's called breakout. But if price fail to continue to the upper side, then return back to the range, it's called fake breakout. Again, if price break a level, it's called breakout. But if price retest and then continue to the previous direction, that is what we call real breakout. You can see the difference. Okay, so you can see the difference. I'm going to show you on the chart on how to identify and trade breakout. Okay, there are different ways to identify and trade fake breakout and real breakout. For instance, if you see a market moving in a downside, it means you're going to be using some trend line because sometimes the market will break the trend line. A lot of traders might think the price will go up, but unfortunately, the price drop. Sometimes it touch the trend line reverse. So, but if the market also is moving a sideways, you're gonna see some kind of breakout like this. Then the market came back to the range. That is what we call fake breakout. Okay, but if sometimes the market will just reverse exactly at the level, then return back to the range. So I'm going to show you how to identify such breakout. Take a look at this. This is an uptrend, right? This is an uptrend. So if you want to draw a trend line, okay, you draw it like this. Okay, you draw it like this. So what do we have here? We have a support level. Okay, remember, let me draw it again because don't want you to be confused on what I did here. I want to draw this trend line to make sure that it touch as many levels, okay, according to the price movement. So what I'm going to do is simply draw a trend line starting from here. Okay, you can see some support here also. I'm going to extend it. If I should draw it at the low of the candle to look like this, but I have to draw it at the body to make sure that touch as many level as possible. Okay, then you can extend it. Okay, you can see after this place is touched here, here, and here, then here also, then you can extend it. Okay, so now let's see what we did here. So according to the price movement, I started from here, connect to this low, and also when price reach this point, we see a reversal to the upside, connect to this low. Then also we see a reversal. Then the market break the trend line to the downside. Then also it return back to the range. You can see the green candle return back to the range. If the market, so this is a false breakout, a fake breakout. If the market will break the trend line, then retest the trend line, continue, or maybe show a sign of continuation, like a spinning top or a doji, then it indicates the market is real breakout. But here, see the candle, look at this green candle, it form, then go back to the range. So we call it false breakout. Okay, then the price also retest this level, retest this level. Then look at this doji. This doji around here indicate that the buyers wanted to enter, but they failed to enter. So in that case, we have the level. Okay, so that is also, so this is a support level. Okay, but the price action that occur here indicates a false breakout. Okay, it indicates a false breakout. Okay, but this is a real breakout. Okay, this is a breakout, not a real, not real. This is a breakout. If the breakout is going to be real, it means that it has to retest the trend line once more to reverse to the downside, or maybe look for any horizontal level, any horizontal level on the left side before it reverse. That is when you can call it a real breakout. But if the market break the trend line, then return back to the range, is called fake out or false breakout or fake breakout. That is the difference between, both of them. Okay. Now there are so many ways the market can give you false breakout or real breakout. Let me show you some example. Let's say assuming we have a resistance area, then we saw the price approaching the resistance. Then at first, the market break the resistance line. A lot of traders might think, oh, this is a real breakout. This is a real breakout. This is not a real breakout. This is a breakout. Okay, this is a breakout. But if the price rejects with a long wick, it's called false breakout or fake breakout. It's called false breakout. But okay, but if the price close above the resistance line, the next candle immediately formed a red and came back to the range. This is a false breakout, or you call it fake breakout. If the market break also the line like this, and then the next candle continue, the market retrace and test the level, then you see any reversal sign, maybe a hammer or a bullish engulfing, a doji or inverted hammer around this area, it means that the market is ready to go more up. Okay, so in this kind of situation we call it real breakout. Okay, this is a breakout, but if the price rejects and close below the line, we call this line here, this rejection, false breakout, because the market just spike out of the resistance level, then return back close below the line. So it indicates that this spike is false breakout. But there sometimes the candle will just close above, then the next candle will just form red immediately. Once the candle form red immediately, then come back to the range, is also called false breakout. Then the next one, which usually occur, is when we have a red candle, sorry, a green candle approach the resistance. Then we have a small, tiny doji or a spinning top. Then immediately the next candle form red. This is also called false breakout. Okay, false breakout. If the market just form a spinning top like this, then come back and retest this level, excuse me, 1 minute guys. Okay, where are we? So we are talking about, I'm giving an example of real breakout and false breakout. Okay, so as we are saying, that is a resistance line, a resistance line. Okay, and if it is a real breakout, sometimes you will see that the price will reach the resistance, it reach the resistance reject. So you might think of going with sellers on the next candle, but the next candle open here, next candle open here, then form a green candle. Okay, if it happen like this is a real breakout. But if the market or the price come back to the range, that is a false breakout. Okay, so now let's go to the chart and let me show you some of the things. Okay, look on the left side here. I'm going to use a line. Okay, if I draw this line somewhere here, or let me say this way, okay, let me adjust it. This, okay, we have a level because we see the market return back to this level, then continue. Then we see another price movement, break the line, the support line, then return back to the range. This is a false breakout. Then you see the market again return back and form a green candle exactly at the same line. Then sellers again reject. This is also a false break. Then another candle reject, a false break. Then finally the market break the level. So you can see that that false break, the false breakout or the fake breakout is up to how many times? One, two, three. It means that the support is weak, is getting weak. If the price should be able to break the support and reverse back to the range, it has already showed that the support is not that strong enough to hold the price. That is why we have this false breakout, false breakout. That is why the sellers are able to break the market to the downside. Okay, so sometimes when the price reverse to the downside, it means that sometimes the market come back to this range, you can open the trade. Okay, almost reach there. Maybe this movement is going to reach there. So let's check other charts. Let me show you some example of false and real breakout. So what are we going to do here? I'm going to draw a trend line because you see the market is going down. Okay, I'm going to draw a trend line. What I'm going to do, I'll make sure that it has as many touches. Okay, so what do we have here? As you can see, from this resistance, you can see the market respect the resistance, then the price spike out of the resistance line and come back to the range. You can see it become also a reversal. Okay, then also the market reverse. So this movement here is called fake out. The market also reverse. You can see the market reverse, reverse, reverse. This is also a false breakout, false breakout. Touch, reverse, touch, reverse. So how many false breakout do we have here? Let's check it out. We have one. All this rejection also, as the candle didn't close above the line, so we should be having this one because we see a green candle close above the line, the next candle open above the line. Then we should have this one. Okay, you can see candle close above the line. Then we should have this one, candle close above the line. Okay, so we have how many false breakouts? We have four, which indicate that if the market is able to come back to this resistance trend line, it might happen that the market did not respect the trend line, then continue to the upside. So that is how you identify a false breakout. Okay, now let's go, let's see here. We're going to be using the horizontal line. So look on the left, we have this low, we have this low here, we have this low. So okay, I'm going to put it at the body of the candle. So we have one here, then we have this false breakout. You can see, look at what I'm talking about. When price break the support, you can see the market return back, reject, not to close above the line. If the price close above the line, it indicates that buyers will enter again, and that is a false breakout. But here, to trade with 1 minute candle and 1 minute expiry time, wait for the price to reject. Okay, and that rejection, the name of this candle, we call it the shooting star. Okay, we call it shooting star, the name of this green candle. So price did not close above the line, it reject and close below the line. So that is why sellers was able to repel and enter on the next candle. So that is what we call real breakout. But if the price able to fake the move to the downside, then return back to the range just like this, okay, just like this, you can see after this breakout, the market come back, it did not close below, it just continue close above the line, then continue. Okay, that is a false breakout. Okay, you can see rejection, then this candle close above, the market again come back. Okay, see the market, the price close above the line, then sellers again entered. This is also a false breakout. Then the price come back, then the buyers enter the market again. They are above the line. That is a false breakout. Then we have a breakout, not a real yet, a breakout. So after seeing this breakout, what happened? The market retest the line, the level, then a hanging man, it did not close above the line. A hanging man formed, and then what happened next? The sellers enter the market. So when the price again resume back to the level, we have a candle close above and here something like that. So that is market is not move smoothly, does not move smoothly. Then we have this breakout. So the trend line and the horizontal line meet together, it become a resistance, become a resistance. Okay, which indicates what I'm expecting is for the price to break this trend line, continue to this level. Okay, if you don't know what I mean by that, that is price action. Price action, that is understanding the market price. Now, you want to draw a support trend line in this kind of situation. How will you draw it? You know, we have so many lows. We have this low, we have this low, we have this low. Some you might be asking this question: should I draw the trend line like this? Okay, because you connect the low from here to this level, or should I draw it like this? Okay, or should I draw it like this? But make sure that the trend line touch as many level as possible. Okay, so what I'm going to do is draw it like this. Okay, you see that I leave this, I didn't draw it, I didn't start from here, I start from the correct movement here. Okay, you can see there's no false breakout in this situation here, there's no fake breakout here. Okay, because we didn't see any price to spike below the trend line. Okay, so that indicates there's no false breakout. But here we have this spike, the market come back, then reverse. Okay, here also the same thing, here also the same thing, and here the same thing. So that is how you find a false breakout. Let me give you two more examples. Okay, now, okay, one more example. Look at the price action here. When the price buyers reach this level, sellers entered. Again, buyers entered, sellers. So from here is our sellers area. Okay, so which means that if the price was able to break above the line, it indicates a breakout. But if the market come back to the line down retest, it become a real breakout. But if the market return back to the range, this is the range I'm talking about. We have this. So let's draw a support. Okay, that is the support level. So we have something like this: up, down, up, down, up, down. So we call it a range. If the market break the upper line and come back to the range, that is a false breakout. Okay, that is a false breakout. Okay, the market has break the line, the upper line. Let's see what happened next. We have a strong red. Then it come back to the range. That is a false breakout. So definitely going down. Then the support, we have a breakout. Then the market retrace back, and again we see some sellers, because this is a support line. Then we see some buyers trying to reach the level, retest, and we see a reversal sign, seller center for 1 minute, but that is a false breakout. But that is still within the line. Okay, that is still within the line. Then the candle, also a strong candle, break the upper line as well. It reverse. This is a false breakout. Then they come back to this, then buyer center back to the range, a false breakout. Again, after reverse back to the range, the candle close exactly at the support, buyer center. Then this, a breakout. Let's see if they force. The market again return back to the range, false breakout. Here also false breakout of the support. Again, breakout, false breakout, market reverse. Then a breakout, false breakout, real breakout. Then price again return back to the range, and here a breakout. Then price return back and retest the level, then go down. Okay, keep going down. You can see the last candle that closed here. Oh, shit. Okay, I'll be right back in the next 2 minutes. Okay, guys, welcome back. My network went off unexpectedly. So where are we? I think I was talking about the fake breakout. So without wasting most of our time, let me quickly show you how to trade breakout and the real breakout. So what I'm going to do here, I'm going to draw a support. Okay. So here we go. Okay, let me restart the chart. Then I don't know why it's still yeah, I don't know why my IQ option is crashing a lot. I don't know why. Maybe I haven't update the version. Maybe I will do that after this section. It crash a lot. I don't know. So shoot. Okay. So as I was saying, I want to draw a line, then show you how to trade um the breakout and the real breakout. Okay, this is a support level. We have this red close, then the next candle open. Then I place the line at the next candle open. Okay, because the market is going up. Then this candle break and then return back. Then again we have this candle reject. It decided to go down. The price again return back. Then this one got rejection, no breakout. This was a false breakout. Then we have the a rejection, a bullish candle. Then this is a breakout. You can see the market gap a lot because of so many gap. then we have this breakout, and then we have a rejection from that trend line, sorry, from that horizontal line, which indicates if the market come back to this line, reject, then close below the line, we are expecting buyers entry. Sorry, we are expecting sellers entry. Okay. So what are we going to do? We're going to wait for the price to touch this line. Once the candle touch the line, then close below. And if that candle is a reversal sign, then you place your trade. You can see, I know the market is going up according to the price action which I said, which I told you guys that the market is going to break this upper side and continue. Okay, that is what I mean by price action. If you want to learn about price action, I think that would be the course of forex course, online course, online forex course next week. Okay, so I'm going to show you how to predict price like this. Okay, how to predict price like this. So I'm still going to show you so many things, and I want you to join the group. Okay, because if binary is so hard for you to understand, maybe forex will become easy. Because the first thing I first learned started as a uh, when I started as a trader, I first learned how to trade on forex before I go to binary. So everything I learned today is from forex. Everything I know about binary today is from forex. Okay, so okay, this is another resistance. Okay, so let me do the analysis here on this resistance which I just draw. Okay, I didn't check on the left side, I just draw it here, but on the left side it seemed to work perfectly. Okay, the reason why I draw it here because I saw rejection and this rejection and this rejection and this rejection and this rejection, which means that this move here is a false breakout because after the price break it turned back to the range. This same thing here, false breakout, price break, return back to the range. But this no breakout, no breakout, no breakout. Same thing here. On the left side, rejections, that is a perfect level. Then this, a breakout, then price return back to the range, then it went down. Let's see Euro GBP. I think the market rejects from the zone and from the support line, from the line, and then close as doji, which indicates the seller's entries. Okay, close as doji. So it means that the market is now ready. It means that the market is now ready to go down. Okay, because of this doji candlestick, which reject from the trend line. So it indicates the price is now ready to go more down. Okay, so here, if the market touch this line, there's going to be a rejection almost. Okay, and here which we have drawn here, the support level, if the price touch it, it will be a rejection. You see a rejection. Okay, if this candle break this line, it will go down, or if this candle break this line, then return retest to go down. But if it rejects, you can see there's a rejections. There are some rejections, which means that the if the candle did not break, we are expected the buyers to enter again. Okay, now we have a breakout. You can see there's a breakout. There's a breakout. We don't know if this is a real or false. So let's check it. Let's wait and see. The candle reject and close above the line. That is a false breakout. There's a breakout. So if market break line, support line, you will not know if it is going to be real or false. All you have to do is wait for the next candle and wait for the next price action. If the price return back to the range, that is false. Okay, if price did not maybe retest the trend line, reject, then go down, that is real. Okay, So that is the difference between real and that is how to identify real and false breakout. Okay, let's see what this candle is going to do. If it rejects this line, then close below, it indicates sellers will enter. But if it close above or close above, it means that the buyers will enter, and that's a false breakout. I think after this candle, okay, uh, very tiny candle. Let's see what the next candle is going to be. You can see the market again visited the level, and we have a seller's entry. That is a resistance. So the support line become a resistance. Then we have some seller's entry. And here, what is going on here? Let me check 2 minutes. Because this kind of movement here, this doji, it indicates a support. Okay, I know it's going to form like this, but I want to be sure. So here, let's draw fake and false. Sorry, fake and real breakout, and let's see which one is going to. Wow, this is somehow complicated, but I'm going to make use of the trend line. Okay, this is a resistance trend line. Then there's a breakout. Then we have a retest, and then this candle. I think the next candle should be green because there's a rejection from the trend line as well. So I think the next candle should be green. This one is a real breakout. There's no retracement. You can see the sellers entered. The market is still going down. I think the market should go more up from this level. Okay, where is the next level? The next level is here, is something like this. Okay, so after this candle break the line, it return back to the to the line, support line, seller center. Then this, then the market break. Here again, rejection, seller center. Here again, rejection, seller center. And here, breakout, rejection from the trend line, also rejection from the line, and buyer centered. Here also, where the trend line, the horizontal line meet up, the candle close exactly at the trend line and also at the horizontal line. Then we have a rejection, the buyer centered. Okay, which means that the market is now ready to go up. So this kind of movement here, or this kind of price movement here, is a real breakout. Okay, but if it is a false breakout, this candle we should not close exactly here. Okay, it should go more down before we expect before we think we call it a false breakout, but it closed exactly at the level. There's something that usually happen. A red candle close here, or let's say a red candle close here below the horizontal line and the trend line. Then the next candle gap up. The next candle gap up. So what do you think is going to happen? The market will form a red candle because its gap then open above the lines or above the level, then it's going to form a red candle. Okay. Same thing that usually something that also usually happen is this: a red candle almost touch the line, then the next candle open here. What do you think is going to happen next? There's going to be a green candle. Okay, there's going to be a green candle. So always observe that whenever you are trading OTC market because of the gap. Okay, you can see the candle rejects, the next candle form red. Okay, I think this is a false breakout. I think this is just one entry of real breakout, but this is a false breakout. See the candle come back, the price come back to the range. That is a false breakout. Wow, I was wrong here. I thought the market is going up, just like um, just like this, and then this a breakout. The market is still going down. You can see the price also reject, still reject from this line. Okay, because reason why the market, anytime the price touch the line, there must be some seller's entry. When the price touch the line, there must be rejection or seller's entry or seller's activities. Why? Is because this is a support, this is a buyer's area, because anytime the market reach this level, buyers entered. But this, the sellers were able to repel the buyers and they break the level. That indicate that the sellers are more stronger than buyers, but market, the buyers still own the level. That is why the price rise up again. And this is the level where the sellers start dominating the price. So which indicate the buyers are no more in the market, then sellers push the price down. So as the sellers push the price down, it means that this area now is the sellers area. So anytime the price touch the line, there must be sellers entry. Anytime the price touch the line, there must be sellers entry. Let me show you another. You can see same thing here. The level, the line is a buyer's, is a seller's area, but the buyers violate it, then the price rise up. So anytime the price touch this trend line, there must be buyer's entry. Even if I didn't draw any line, you might be thinking, oh, this is the next support level. Wow, this is the next support level. Market should reverse, but that is not the reason the market reverse. The reason the market reverse is because of this trend line. Though even though you draw the horizontal line like this, the market still respect it, but you might be confused. We have this, we have this, we have this. Which one, how should I draw it? You might still be confused. But making use of trend line and horizontal line will make you understand the price action better. Okay, you can see. So when the price reject from here, also the candle also reject from here, buyer centered. You can see after this one, buyer centered. After this, buyer centered. Even the candle break below the line, buyer centered. Here again, buyer centered. The candle break below the line, buyer centered. Reject from this trend line, buyer centered. Here also horizontal line, buyer centered. So which means that that is also a buyer's area. And this candle close exactly at the trend line and also exactly at the horizontal line. That's why the buyer centered the market. You see again the seller still entered the market. And here, what is really going on here? Okay, let me extend the line. I think this candle should be green. Price is flipping inside this trend line. I don't know why the market is still forming a red candle here. Okay, I think, like I said, I think this candle should be green. Okay, OTC market is very crazy. You see, almost close as red. Because the reason why I say it should be green is because after seeing this resistance and a breakout and this, the market retest, reject, buy center, and this one breakout, break from this trend line, also break the horizontal. When the price return back, it reject from this horizontal and sellers entered again, also reject from this trend line. You can see there's a tiny space. The space between this trend line and this horizontal line is very tiny for the buyers to continue or for the sellers to continue. This candle was unable to go up, it reject from sellers. This candle was unable to go down, it reject from buyers. So if this one reject from sellers, means that sellers will enter because of this trend line become a support. Now it's a resistance. R resistance. This one support. This one support. Then this here again, and this trend line, this one's supposed to be support, because if you trace it to the right side, it is a resistance. The trend line, you can see a resistance, and here it become a support, the trend line, and here also it become a support, the trend line. So which means I have understand what the market is trying to do. Okay, again it reject from this support, it become a resistance, and the candle close here. So I think the market should go more up. Okay, because the support, as this is a false breakout, this is a false breakout of the trend line, the market return back to this range, then this candle also come back, break the trend line, so it indicates that is a false breakout. What I'm expecting is the price to now should rally to the upside. You can see this one now is rallying to the upside. Okay, that is how you trade um, with 5 minute expiry time and or 10 minute expiry time. So let me see one more example and then I stop for today. Let's see GBP USD. See what we got here. Okay, starting from here, I like when the market form like this because it will make you understand better how to draw the lines, how to draw the support and resistance. Okay, starting from here, I place the line because this is the origin. Resistance. Okay, let me adjust it. There's no adjustment, no more adjustment. So this is support. You can see it reject a breakout, the market return back. Okay, look at what I'm saying. There's a little gap here. That is why, remember what I told you when I said some minute ago about breakout. If you have a resistance line, the market re, touch the resistance line, or sometimes we break the resistance line, then the next candle open here, gap up, the next candle will be red. Same thing opposite side as green. The candle break, the market gap down. What will happen? What do you expect next? Next candle will be green. Okay? Or sometimes it will just reject. Then the next candle break. Okay? Once it gap down. So always take note of that. You can see there's a gap. That is why it formed a green candle. So anytime the price comes, it always also form a green candle, a support like this, a support rejections. You can see rejection. The price could not able to go down. It's close above the line. That is a support. And finally, it break and return back to the range. And here it becomes a support. So I think if it becomes a support, the price should rise up. Like I said, that is how this is the trading strategy which I'm going to show you how to predict a momentum. Okay, even with 5 minutes or 10 minute expiry time, how to predict a momentum. I'm going to show you. Those of you who are following me on the WhatsApp group, BFTA Pro B, you will see some of the trade which I took today on forex. Okay, some of the trade. Sometimes I hope you guys will learn a lot of things in some of the trade. You see the some trade with a bullish or bearish momentum. That is how I predict. I look for false breakouts, fake breakout, fake out. Then look for MPL zone. The what we call, let me say something about MPL. A lot of people still confused. What's the meaning of MPL? MPL is maximum pain. Maximum pain. For instance, a buyers, or let's say the price approach resistance. Sellers are happy to sell. Then they're happy to sell, extend the trend, the price to go more down. But it only stop halfway, half on the way. Then the price again return back to this line. They're happy to sell, once more. Okay, so we have how many resistance? One resistance, two resistance. They now see that the retail trader are now happy. Okay, anytime the price reaches level, we must sell. But what happened? The price just break out of this resistance area, and then people are now say trader are now say, okay, breakout has occurred. It has taken out our losses. Let us begin to buy, which means that if the price come back to this level, I'll buy. But instead of buying, they place their stop loss. They buy here, they place their stop loss a little bit lower, but the market only move up a little bit. They now think, oh, let's see where the market is going in our direction. But fortunately, drop the price drop. Immediately the price drop, this is the maximum pain. A lot of traders are now in pain. They are in pain. Okay? They are in pain because they lost their money because they thought the price will go up. They thought the price will go up, but instead they placed their stop loss here. But instead the price to go up, it come down very strongly. That is the maximum pain. Okay, this is just the QML, or you can say the previous high, and this is the highest high the market has reached. So this is a first breakout. Okay, so this is the maximum pain because sellers or buyers think that, okay, now traders think that, okay, retail traders said we are selling the market from this resistance, but they place their stop loss here. First thing, they make some profit. The market again visit the level. They place their stop loss here, it went down, they make some profit. Some are even expecting to go more down, but it didn't happen. Before you know, it take out all the stop loss here. The price take out all the stop loss. Then reach this high, then coming down. You can see that resistance supposed to become a support. That support supposed to rise, but a lot of retail traders now say they are happy to buy, but instead of the price to go up in their favor, it move up a little bit and then drop. So that up movement here, which is a false move, or let's say inducement, which is a false move, is what we call the MPL, maximum pain line. Maximum pain line, or call it, let's say, maximum pain level. Okay, so the smart traders have already entered the market here, thinking the retail traders place their stop loss here, buying, but instead they take out all the stop loss here. So the stop loss also take out here. The first thing, they start selling, retail traders start selling here. Stop loss is taken out. Second one, the stop loss also is taken out. Now, what will happen? They will be frustrated. They will not think, oh, what is going on? The market is going against us. The price is going against us. So what really is going on in the market? Why are we losing trade? Why are we losing money? But that is what we call the maximum pain. But the line which take out the low started from here. So that is why if the market return back to this range, we are expecting the price to go or to reverse to the downside. That's what we call maximum pain. Same thing that's happened here. Same thing that is happening here. We have this support. Buyers buy the market. Or some might place their stop loss here. Buyers again buy. They place their stop loss here. Then the price again reach. They think of placing their stop loss here, but it take out the stop loss and then return back. So as the return back, the market again return back again from a maximum pain line, maximum pain level. So which means that the price visit the maximum pain level, we expected the market to reverse. If you go to the left side, if the market close below this line, or let's say the price go close below the line, we might see some buyers entry. Let's check it out. You see rejection, buyers entered. But this, it closed very strongly above or below. So it indicates the market is not respecting this level. So that is how you trade maximum pain. Now, as the market has come down, and then break out the line. Let's check. This line supposed to be a resistance, right? Let's check it out. Let's see. And then what happened? Rejection from the line. You can see when I say always trade the pattern anytime the price reach support or resistance line. There is no false breakout here. Okay, so if the price touch the support, become resistance, then this is spinning top. You can see after a strong bias, a spinning top indicates a reversal sign. That is why we have this movement to the downside. And then the market again break the level or touch the zone, then the spinning top. This candle is supposed to be red, but there wasn't any sign of sellers. That is why the buyers took over. So when the buyers took over, sellers has to enter the market again. Then the market dropped massively. I think it dropped massively. Let's see. Again, it come back again to visit the level, to test the level, and then it drop again. Again, it come back to test the level multiple times until now it become a support. Okay, so you can see it become a support, which indicate the market should go more up from this level. So that is how you trade support line, finding a breakout and a false breakout. Now, the question about this one here is that when I've drawn the support, then this candle break the line above. You might be thinking, is it a false breakout or is it a real breakout, or what do we call this kind of movement here? Well, the candle break the line above. It means that this single line, we cannot take it as support area and resistance area. Remember what I said something about area of support, area of resistance. Okay, so I think that one you should be able to answer the question what really happened here. This candle did not break any area of support. It's still close inside the resistance area. Okay, close inside the resistance area. Let's say this is the support, this is where the price reached before it dropped, so that is our resistance. Because also we have this rejection, then the market go down, so that's our resistance. So which means that our resistance area is here. If the price even close, but if the price able to repel and close above this upper line, it indicates the market has already given us a breakout. Okay, if it is going to real, if the breakout is real, it should come back to the zone, or no, it should come back to retest the zone, then continue upward. But if it's going to be fake, it should break the upper line, then return back to the range. That is a false breakout. So the price rejects inside the zone. Here again, the candle close inside the zone, and here reject inside the zone. So watch this. If the candle reach inside the zone, sellers is definitely going to enter the market. You see the market now is now buyers are now entering the market. You can just enter one, two, three candles here, then you want the trade. You can see very strong uptrend. I think the market is leaping or ready to break out. I don't know what is going on here. So many gap and up and down. No smooth movement. Let's see this. Resistance drop. This supposed to reverse or give a breakout, but it the price gap down. I think it's ready now to go up, go more up. I think the price should go up to this level. Then this one, touch this one. Let's see if the line is perfect. Well, I do the line from here. I think it's perfect. So there's no mistake here. So which means that if the candle, okay, we have this downtrend. Let me draw the second line so that you can see the candle, the price have already break close above the line, then rejects. Let's see if that is the first breakout. Draw the second line here. Okay, the second line, because this is also a resistance and here, and this is a breakout. So which means that this candle rejects inside the zone. So I'm expecting sellers to enter on the next candle. I'm expecting sellers to enter on the next candle. Then this one is still reaching there out to the level, and the zone we have already drawn the two lines. I think this one is making some correction. So let's wait and see if sellers will enter the market or not. Wow, the buyers are very strong and it already break the upper line. It means the market is giving us a breakout. This is a breakout, but we don't know if it is real. If it's going to be real, it should be retest this upper line, continue. But if it is a false, the candle next candle will form a strong trade. This is a losing trade because the buyers are very strong. No sign of sellers. The market is still going up. So here, the market is still going up. I think it's going up to retest the second uh, line, the second area. Okay. So this is just the breakout, and that is the maximum pain area, maximum pain zone. So if the price break this line, it's close inside the maximum pain zone, so market should reverse. But as the market is still going up, let's see what we have here. Okay, okay, the price reject from here, the market go down. So which means the market close inside the zone, we expect sellers entry. Or if the market come back to this zone or reject, we expect buyers entry. Either way, let's see. And this one, I think sellers should enter. Okay. This one, there's a doji candlestick that reject from the zone, and the buyers entered on the next candle. Because reject from the zone means the seller should enter, but buyers enter because no sign of sellers here. And this one, the candle closed inside the zone, but there's a gap. There's a gap down, but it's still inside the zone. There's a gap down, it's still inside the zone. I think that is why sellers entered here. Okay. A few buyers entry, the market came down again, then returned back. So which means the market touched this level, should reverse. Let's check on the left side. Let's see how we can draw the area. You see, anytime the market reach this level, it reverse, it reject. So that is where we can draw the second line. Okay. So that is our resistance area. Wait for the candle to close inside the line and no gap. Oh shit, there's a gap. There's a gap indicates buyers we entered. Remember what I said about the gap, the explanation I made some minutes ago. The candle close inside the zone, rejection, but there's a gap. That gap indicates the buyers will break the the level. This gap, this is what I'm talking about. The resistance line, the candle reach the level, give a false a breakout, but reach the level with a rejection. If the next candle gap down, it means the buyers will enter. And that is what happened. The next candle gap down, it means buyers will enter. That is why buyers entered here. And a very strong buyers enter. You can see the candle closed inside, sellers still entered. And now you see the price retraced back, buyers entered. Same thing here, if the market continue and close inside this zone, sellers will enter. So that is how you can see the market is now going up. it's going to reach this level. So let's see where we can how we can draw two lines in this kind of situation. Look on the left side. You see the market reached this high before it reversed. Here also we have this rejection, which indicate that the market is open from the zone. So let's draw the first line, the second line here. Okay, let's draw the second line. And what happened here? The market had break the two lines, a strong buyer's entry. Buyer supposed to enter here, but it's come down to this level to enter the market. Rubbish. And this one, a marubozu, or if a shaven top candle close inside, I think seller should enter there. And this one, the market is approaching this. A breakout. Let's see if it is a false breakout. If it is a false breakout, it should close below this line. Sorry, if it is a false breakout, it should close below this lower line. But if it is a real breakout, it should close inside the zone or close above this line to continue to the upside. Same thing here. If it is a real breakout, close above, reject inside the zone to enter, or close inside the zone to enter, or reject, then reverse. Okay, I hope you guys understand that. Then this one that is coming down, if we close inside the zone, it will reverse. If we reject from the zone to reverse. Okay, let's check this one out. You can see a rejection has occurred. A rejection has occurred, and this one it's rejects and form a green candle. A rejection has occurred. You can see once the price touch the line, it reverse. Okay, like I said, it's going to that level, but if it touch the line, reverse. Rubbish. So this one, once you come back to, once you touch this upper line, you reverse. So you can see that is how you trade first breakout, read breakout, first breakout, read breakout. Check this one out. When sellers entered, the next candle gap up, entered open to the gap up and open inside the zone. That indicates sellers area. So that is why sellers still entered here. But we are not sure if the next candle will be green or red. I'm not sure about that. Why the market is gap, 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 gap. Okay, so I think I should stop here for today. Tomorrow I'm going to show you how to predict momentum like this. Okay, how to predict momentum like this. How to predict momentum like this. This will help you trade with 5 minute expiry time. How to predict momentum like this. Okay, I'm going to show you some the trading techniques. Okay, you can see taking some trade with the explanation on how to trade breakout and re-breakout is very simple. So I think I should stop here for today. Go and practice it. Watch the video, practice it. You're able to understand better. So I hope you guys will. Okay. So I think let's stop here for today. Tomorrow we conclude it. The how to trade, how to find the momentum, bearish momentum, and the bullish momentum. So that is what we're going to discuss tomorrow, and that's the final day. Okay, so good night, everyone. Have a nice day. Bye bye.